column here. The FTSE up 0.1% as it opens and continues there to climb just a little bit. If we see the continental equity indexes open up, we should see bigger gains, with the exception maybe of, well, there you see the IBEX up 0.7%, the CAC up 0.6%, and the DAX up 0.6%. So with the FTSE now gaining about 0.3, the continent is putting up about double the gains of the London benchmark index. Anna?
So European equity markets then opening to the upside, as you've just been through there, Matt. That's as investors consider the encouraging signs for Joe Biden in the presidential election race and what that does to assessments for risk assets, perhaps, and in particular, what it means for US stimulus. Joining us now is Casper Elmgreen, Amundi head of equities, and I suppose that's what I was referring to there when I said promising signs around a Biden victory. What do you think the relationship between Biden doing well and equities and other risk assets would be, Casper? Because some people say it would be pushed higher by stimulus, by fiscal spending. Others suggest that because of tax policy, there could be negatives. What's your assessment?
I think we are in a bit of a tug of war here between deteriorating economic fundamentals at the one end and the hope for more stimulus at the other end. And I think it's quite clear we will get more stimulus. I think Powell said it very clearly, the risk of doing too little is higher than the risk of doing too much. So we will get more stimulus, and I think we will probably get more stimulus with a Biden-led administration. Now, so it's a nuanced picture, as you said, because there are other parameters to consider, but to put it very simplistically, the market is focused right now on the level of stimulus.
But no one's expecting anything before the election, right? I heard an economist the other day, Eric Nielsen from UniCredit, say that we could see this election contested for the whole month. He doesn't think that we're going to have a clear winner until December. Is that a concern for you? Is that a concern for markets?
I think we are finding ourselves in a situation now of unprecedented low visibility and very wide range of outcomes. So there's a lot of things we don't know. It all starts with the virus, the economy, and then we have the political risk on top. Clearly, we're waiting for some kind of resolution to some of the key political events we have ahead of us, Brexit and the US presidential election. In terms of the US presidential election, the key risk is that we would have a protracted period of a disputed election. I think what we need at the moment is clarity. We need clarity on policy, clarity on tax policy, and clarity on stimulus.
And so when we're in a time of uncertainty, Casper, and maybe waiting for a few shoes to drop, waiting for things to happen in the calendar, it might seem an unlikely time for M&A to take place. I just mentioned this because we've got TalkTalk getting a non-binding proposal at 97 pence a share from Tosca Fund, so that particular hedge fund or money manager here in London making that bid. We've yet to see a share price open for TalkTalk. Do you think that M&A is likely to be a feature of this winter if we see businesses looking cheaper than they did? Is that going to be something of a theme?
I think it's something we're seeing already, to be quite honest. So in Europe, we've seen it as a significant theme, particularly in our small to mid-cap space. We've seen a lot of consolidation and a lot of M&A, and I expect for this to continue. So I think this is one theme. Growth is scarce. Companies are looking, how can they build stronger business models? And you're seeing a lot of companies that are also struggling with demand disappearing and are perhaps looking for partners. So I think this is an environment that is very conducive for more M&A.
Well, you're going to see companies, I would guess, also struggling under loads of debt, just like consumers and governments. Are we going to see a big wave of defaults?
I think this is a really, really interesting question because one of the impacts of the very large policy response we had from monetary and fiscal authorities has basically been to cushion the shock of this coronavirus. So we haven't seen a lot yet, to be honest. And I think the massive furlough schemes that have been rolled out have really done a fantastic job in terms of cushioning unemployment and cushioning what would otherwise be a very significant adverse effect to business. Now, the question mark is how long will these furlough schemes and this fiscal support continue, and how long will we have to live with this virus? So I think we've seen less than we would otherwise have expected, but clearly we are seeing a lot of companies come under significant pressure in terms of their balance sheet and either coming to the debt or coming to the capital markets.
When would you see as a good time, Casper, to pivot to value stocks away from growth? There are concerns around growth in the US, particularly around tech and around regulation and what a Biden administration, if we get one, what that would do to big tech. So how do you time that and other factors to work out when to pivot to value?
So the timing here is very, very difficult. What I will say is that this is one of the most interesting dislocations that we see in equity markets at the moment. So the valuation dispersion is at all-time extreme. You have a situation where at one end of the extreme, you have some of the high growth, such as the technology stocks being very, very expensive in our view. And at the other end of the spectrum, you have some of the traditional value stock being very, very cheap. In terms of when this is going to turn as a factor, I think you probably need to see slightly higher interest rates and slightly higher economic growth. But what I would say as a fundamental bottom-up investor is that the hunting ground in the non-disrupted part of value is really, really attractive. So if you can afford to be patient, looking for some of the companies that are not disrupted, some of the companies with a relatively higher degree of resilience and balance sheet strength in the value compartment, there are significant opportunity there.
What do you think about the big tech breakup story, Casper? I mean, I was just talking to Margaret Vestager the other day. She and the EU are hunting down Apple, taking them back to court, I guess, or at least appealing the decision. In the US, the House has put out a bill that could potentially break up some of the biggest tech companies in California. I mean, is this the kind of thing, especially when you look back historically at the monopolies that have been busted up, that happens quickly? Is it the kind of thing that they get slowly taken apart? How does this work out?
So I think when the starting point is technology, in my view, is very, very expensive, and I think the market are ignoring some of the risks around this cohort of companies. So I think one of them is tax, and I think the other one is regulation. So it's very clear that what you have seen is a situation in certain compartments of technology where you have monopoly-like situations. Now, how that is going to be dealt with, I think, is very, very uncertain, and we know practically it's very difficult to do. But clearly, this is a risk for this sector. I think you probably have some of the companies, when you assess them with a fundamental bottom-up lens, where actually a breakup might not be so bad, because the sum of the parts can actually be positive. But I think for most of the companies, a regulatory breakup, I think, would be a very big negative, as would, I think, a further focus on corporate tax.
Casper, thanks very much for joining us. Casper Elmgreen, Amundi's head of equities. Thanks very much for giving us your time. Coming up, the hunt for the WTO's next leader is down to the final two. We will bring you an exclusive interview with EU Trade Commissioner Valdis Dombrovskis. That is coming up next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. Right now, 11 minutes into the session, we're looking at gains on the stock 600, about 0.7%. That's the broader European benchmark index. You can see some of the industry groups inside it that are gaining here are travel and leisure, or leisure, as Anna would say in a much classier way than I do. And the stock 600 industrial goods index also rising about 0.9%. Now, the search for the World Trade Organization's next Director General has been whittled down to two final candidates. Sources say they are South Korea's trade minister and Nigeria's former finance minister. That means the body is set to get its first female leader. Let's get over to Maria today in Brussels, who is joined by a guest. Maria?
Exactly, Matt. And, you know, there's a lot of conversation around the WTO, and we are now speaking to the Trade Commissioner, Valdis Dombrovskis, who's joining us from Brussels. And congratulations, by the way, because you're now officially Trade Commissioner. You only got approved by the European Parliament yesterday, so I guess you're very happy about that. But before we get into the WTO, I did wanted to ask you for an update on where the trade talks with the U.S. are going or potentially headed, because, you know, the idea was that you would go with your team to D.C. I take it that's off the table now until after the election. So I wonder, what kind of communication are you having with the administration at this point?
Good morning. First of all, thank you for the congratulations. Indeed, I'm looking forward now to take over officially the trade portfolio. Well, as regards our negotiations with U.S., indeed, currently there's no plans that we would be physically going to Washington, D.C., but at the same time, we are in intense contact with U.S. administration. Myself, I had several phone calls with the U.S. Trade Representative, Ambassador Lighthizer, and there are a number of issues, of course, which we need to discuss regarding EU-U.S. relations.
Okay, so you're not going there physically, but you are on the phone with Lighthizer. You are having communications.
Exactly.
Right, and I have to ask you, you know, a lot of this, of course, could change after the election. It's no secret that many things could change, starting who will be the president at that point. Is that going to change the dynamic at all between the EU and the U.S. going forward?
In any case, EU and US are and remain strategic partners, like-minded partners, and there are many things where we just need to work together. And when EU and US are working on together, we can be also a global force for good. So from that point of view, we will continue close engagement with the US, regardless of which administration is there after the elections. Of course, we have also our degree of challenges. For example, the current administration's tendency towards unilateralism as regards trade and international trade conflicts, which we have as a result. And we think it's in any case important that we bring back US also to the table of multilateral negotiations, including the WTO reform.
And that takes me to my next question perfectly, which, of course, you know, there's a competition to see who is going to be the next Director General of the WTO. We understand it comes down to the Nigerian candidate, the South Korean. Both are women. It would be the first time in 25 years that we see a woman there. Who do you want to get the position?
Well, as you know, from the EU side, we always aim to have a coordinated approach. So we welcome that indeed there are two female candidates now in a final round. But before EU can express any preferences, of course, we need internal coordination. We need discussions at also trade ministers level, and only then we can take some decisions and move forward. Now, news are just out, and official announcement is yet actually to come. So first it will require some internal consultations within the EU, and then we will be able to, so to say, voice certain preferences. But what can I say? Both are very strong and very experienced candidates.
Right. So you could work with the two of them. That's what I take you're saying. But ultimately the question here is how is the WTO going to see meaningful reform? Because I think it's not a secret to say that for a year it's been very dysfunctional. WTO, some will tell you, even becoming obsolete. So do you think this organization can still work going forward? And what areas do you feel at this point really need to see major reform?
Indeed, that was also our point which we were making from the EU side when discussing with the potential candidates. For us, it's important that we have experienced candidate with political experience, with political weight, which can actually bring WTO member states to discuss things, including at political level, and to make compromises. And we need a candidate which is dedicated to WTO reform, and there are many things need to happen. So first we need to revitalize a negotiating function of the WTO. We recently have not had any multilateral agreements, and many things are done either bilaterally or at best plurilaterally. Appellate body is not functioning, so we need to unblock this situation. And in generally, we need to get WTO procedures more in line with the current challenges, also being able to deal more efficiently with issues like industrial subsidies and transparency thereof, forced technology transfer, intellectual property rights. So there are many things which indeed need to be dealt with.
Right, and there's also a question mark around what is going to happen with Boeing, that potential retaliation from the EU when it comes to the US. What can you tell me about that?
Well, on this, obviously, we are in close contact with US, and our first preference is to have a negotiated settlement where US is withdrawing their tariffs. Then we will not have to introduce our tariffs, and we rather discuss how we deal with disciplines in the area of civil aviation. Of course, if we will not see engagement from US side, and we will not see US withdrawing their tariffs, we'll have no choice but then to impose our tariffs in line with the WTO ruling.
Right, exactly. So when you get that ruling, if the US doesn't pull their tariffs, the EU has a right, again, that's about 4 billion euros, to put those tariffs on the table. Well, thank you so much, Commissioner, for your time. It's always good to see you, and we hope to see you in person at some point.
Maria Tadeo, thank you very much for joining us with that interview. Maria Tadeo speaking there to the EU Trade Commissioner Valdis Dombrovskis. Now let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. EasyJet has lost over $1 billion this year through September, the pandemic wreaking havoc on the budget carrier's summer schedule. The airline is scrapping its dividend and expects to fly about a quarter of its typical capacity during the final 3 months of the year. It's calling on the government to step in with more aid. London stays as Europe's undisputed stock trading hub may be numbered. More than half of the volume in London is in shares of European Union companies. That's at risk of migrating to the EU without a breakthrough in negotiations. The biggest losers would be investors. More splintered trading will mean worse prices. Activist investor Dan Loeb is urging Disney to permanently suspend its dividend. He wants the entertainment giant to instead spend the money on its streaming service. Loeb says doing so could more than double Disney Plus's budget for original content and bring in additional subscribers. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura Wright in London with the Business Flash. Coming up, we bring you this morning's movers, including GVC Holdings. The betting company has raised its 2020 earnings outlook. This is Bloomberg.
Now, Joe Biden and Kamala Harris would put us back in the Paris Climate Accord. They'd impose the Green New Deal, which would crush American energy, would increase the energy costs of American families in their homes, and literally would crush American jobs.
Joe Biden's economic plan, Moody's, which is a reputable Wall Street firm, has said will create 7 million more jobs than Donald Trump's. And part of those jobs that will be created by Joe Biden are going to be about clean energy and renewable energy.
There are no more hurricanes today than there were 100 years ago.
Thank you.
But many of the climate alarmists use hurricanes and wildfires to try and sell their bill of goods of a Green New Deal.
Joe has seen and talked with the farmers in Iowa whose entire crops have been destroyed because of floods. And so Joe believes, again, in science.
Vice President Mike Pence and Democratic VP candidate Kamala Harris there on climate change and renewable energy during the VP debate last night. Take a look at what U.S. futures are showing. Gains about 0.6% on the S&P and Dow Jones E-mini contracts. NASDAQ futures are up about 0.8%. If you take a look at some of the industry groups that are moving today in Europe, you can see that, Anna, travel and leisure is doing quite well this morning.
Stop. You're okay to say leisure. That's fine. It's just it sounds wrong if I do. But travel and leisure, the reason it's going higher is actually the leisure part and not the travel part. It's because of GVC and the update they gave to the markets, and that's helping some of the other stocks in that sector make some gains, it seems. We also, as you point out, have the health sector in there up by 0.7%. Let's get to your movers now. Danny Berger has those for you. Danny.
Yeah, well, while we're talking about travel and leisure, I want to point out EasyJet. I think the move this morning is pretty interesting because all of the headlines pretty negative coming out of the company, seeing a drop of $1.1 billion in profit over the past year. The third quarter only going to be operating at quarter of capacity, scrapping their dividend. So why is it down not even 1%? Well, this just shows us how investors are really attuned to the balance sheet question when it comes to companies struggling with the pandemic. And things look a little bit better for EasyJet on that front, saying in the third quarter, they estimate that their cash burn, fourth quarter rather, will be £700 million. That's an improvement from the third quarter when it was closer to £800 million. So that's actually probably why we're seeing it down now 1.5%, so slowly being dragged down through the market session, but nothing like the losses we're seeing in Christian Hansen, the Danish foods company that missed estimates, missed the full year. We also saw them saying that they're not going to give out their dividends, so it's one of the biggest losers on the stock 600, easily on track for its biggest intraday loss since March. And finally, let me bring you the biggest gainer. Anna, you mentioned this GVC Holdings, the gambling company, is upgrading their 2020 adjusted EBITDA outlook. Berenberg also rising their price target on the company, saying that they were impressive earnings. They're announcing an acquisition of a Portuguese company. Berenberg thinks that should attribute about 10 million additional pounds to their EBITDA. Anna, Matt?
Danny, thank you very much. Danny Berger with the latest on the movers in the markets. Coming out of COVID, China and climate, all of those in the VP debate. Details next. This is Bloomberg.
Welcome back to the European Open. 30 minutes into the trading day. Let's take a look at how European bonds are faring right now. You can see the Bunds right there at the top. Investors buying them, which is why the color is green. The yield falling, which is why the arrow is pointed down. Right now yielding negative 50 basis points. The French 10-year yield negative 24, and Italian 10-year yields about 78 basis points. Now, Senator Kamala Harris and Vice President Mike Pence faced off last night in their only debate of the election cycle. Harris condemned the Trump administration's handling of the pandemic, calling it the worst failure in U.S. government history. Pence hit back at Democrats' tax plans and questioned if they wanted to pack the Supreme Court, to which he didn't really get an answer. For more on the VP debate, let's go to Bloomberg's Kayleigh Lyons in New York. Kayleigh, this debate was much more civil than last week's presidential debate, much more focused on policy as well. What were some of the key issues?
Well, COVID-19 was absolutely the number one issue, an unavoidable issue, given the president of the United States is currently ill with it. And of course, the candidates had to be very widely separated during this debate due to the pandemic. As you said, Kamala Harris coming after Mike Pence and the Trump administration very hard on that issue, Mike Pence having to defend himself. But to your point about Mike Pence pressing Kamala Harris on everything from the Supreme Court to energy policy, there were a lot of questions that stayed unanswered, avoiding answering questions that they didn't want to. Frankly, there were some key policy areas like China, where they disagreed. Harris saying that the trade war with China is actually one the Trump administration lost. She said it cost hundreds of thousands of manufacturing jobs and a manufacturing recession. A lot of the conversation coming back to jobs in the economy at the end of the day, including the conversation on climate. The question is, even though there was policy substance, is it going to make a difference in this election trajectory, given vice presidential debates usually don't have that much influence, although you could make the argument that this one was a bit different in that both of the ticket heads, Trump and Biden, are going to be, whether each one gets eventually inaugurated, will be the oldest president to be inaugurated. That is a factor. And then, of course, you do have the president of the United States that is sick with COVID-19 at the moment.
Yeah, absolutely. And on that front then, Kayleigh, the background to this is, of course, that the president has been ill with COVID-19. Can you give us an update on his condition?
We heard from his physician, Sean Conley, on Wednesday. He said his vitals are looking good. He hasn't had a fever in 4 days and showed no symptoms in the past 24 hours. And we also heard from the president himself. He put out one of those videos on Twitter on Wednesday saying he's feeling good and really pointing specifically to the treatment he has gotten, Regeneron's antibody therapy in particular. He said to him felt like a cure. He also said that he felt like it was a gift from God that he was caught COVID-19 and therefore understands it better. And of course, the president at this point still on the sidelines from the campaign trail. He is hoping to return to the campaign trail, Bloomberg is reporting, as early as next Monday.
Kayleigh, the 26 days out, or I guess we're about 26 days out from the election. What are the latest polls telling us about the outcome?
Well, Matt, of course, we have to take polls to a certain extent with a grain of salt, not entirely, but as we saw from 2016, polls can paint a very different picture than what is actually reality. The polls at this point, though, show a very wide Biden lead nationally and in several key swing states. The likes of Florida, Pennsylvania, Ohio all show Biden leading in some cases by double digits. In 538, which is a poll aggregator, runs an election model. They see a nearly 83% chance that Biden will win the Electoral College, and as a result, the presidency. Of course, we'll see how that changes as we move forward through the election cycle, and if we do indeed get a presidential debate come next week, Anna.
Kayleigh, thanks very much. Bloomberg's Kayleigh Lyons joining us there live from New York, 3:30 in the morning over on the East Coast. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. President Trump has credited Regeneron's experimental antibody treatment with his apparent recovery from coronavirus. He's announced his intention to authorize its emergency use and provide it free to Americans. The president added he believes his brush with the virus was a blessing from God because it gave him first-hand experience of the therapy. Europe is struggling to curb a resurgence of coronavirus, with France and Spain posting record daily increases. National politicians are leaning on local authorities to curb activity, fearing the economic impact of wider measures. The number of COVID-19 patients in intensive care in Paris has tripled since the start of September. U.S. House Speaker Nancy Pelosi has signaled openness to an airline relief bill after the president stopped negotiations on a broader deal. But Pelosi is rejecting pressure to greenlight individual stimulus checks of $1,200. She says that's insufficient to address the challenges of COVID-19. The World Trade Organization has whittled its choice for the next Director General down to 2 candidates. Bloomberg sources say members of the organization selected Nigeria's former finance minister Ngozi Okonjo-Iweala and South Korea's trade minister Yoo Myung-hee. They'll likely be formally announced today. The WTO has never been led by a woman in its 25-year history. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Laura, thanks very much. Laura right there out of London. Up next, speaking of the city, we could see an equities exodus. More than half of the stocks trading in the capital are shares in EU companies. Could the city face the end of its dominance as an equities hub due to a no-deal Brexit? This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. Right now, we are almost 40 minutes into the trading session. We're looking at a FTSE that's up about 0.1%, almost the DAX and the CAC gaining more, with the Frankfurt Index up more than 0.75%. Now, Uber rival Lyft is starting to see an improvement in business, though rides are still down about 50%. The company's president and co-founder John Zimmer spoke to Bloomberg about the impact of the pandemic, the House panel's antitrust recommendations on big tech, and Labor Department proposal on contractor classification.
Regulation has been a part of our history from day one. You know, we are as much in the transportation business as we are in the technology business, and transportation historically has been a regulated industry. Within our first year of operation, we worked with California regulators to create a new category for regulation. So it's been part of our business. It will always be part of our business. It's it's part of how we think about the path to profitability, but we're basically moving forward on that path despite anything that's going to change around us in terms of regulation.
How closely are you watching what happens next, though, in Congress? Because this is the most broad effort by Congress to do something to break up the larger companies. I mean, clearly you're in one area, and you're not really sort of in a whole array of areas, vertical or horizontal, so I suppose it affects you less. But it's definitely for sure that it's going to impact the operations of bigger tech, of privacy, the amount of freedom that you all have, essentially, it would seem.
I mean, again, the inquiry is focused on companies that are very different than ours. We're in the transportation business. We use technology for sure. Scrutiny is important. Competition is extremely important. We've learned that by, punching up. We've had heavy competition in the early days. People thought Lyft couldn't make it, and we've continually increased our market share as we've been more and more competitive in our space. And so we're focused on what we do. We're focused on our mission to improve people's lives with the world's best transportation. And again, I think scrutiny is needed, especially at times like this.
One of the places you are being scrutinized, of course, is this whole ongoing issue of how gig workers are treated. And I know you make the argument that many of your drivers work part-time, and therefore that puts them in a different category. What will happen if some of these moves go against you? And I'm talking about your cost structure, really, John, and path to profit. If that proposition in California goes against you, what does it mean for you?
Yeah, I just want to start by saying I think, my opinion is less important than the driver's opinion. Drivers 4 to 1 want to remain independent contractors, want to maintain the flexibility, 80 to 90%, depending on the market, drive less than 20 hours a week. And so we think there's a much better way forward than saying everyone should become employees. And that way forward is to say, let's maintain the flexibility and let's add more protections and benefits like we're pushing for in California.
Those drivers that were driving less than 20 hours a week, can you give us updated numbers on who's driving in the pandemic, how many hours Lyft cars are even in service during the pandemic, John, and how it's changed over the last 7 months?
Yeah, the impact to us, broader market of rides being down about 50% now. They were down 75%. So we're halfway recovered across the board. That impacts individual drivers as well. But as you look at how some drivers have shifted, we actually have higher driver earnings now than even pre-pandemic, because there's kind of an equilibrium between demand and supply between riders and drivers.
That was the Lyft co-founder and president, John Zimmer. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Citigroup is paying a $400 million fine and must seek government approval on any major acquisitions. That's after regulators issued the bank a rebuke for persistent problems with its risk controls. Officials are also reserving the right to require changes in senior management if the company does not act quickly to address the shortcomings. Samsung earnings have beat estimates after US sanctions hit its rival Huawei. The world's largest maker of memory chips and personal electronics posted operating income of just over $10 billion for the quarter. Samsung is also expected to regain the crown as the world's largest smartphone maker after Huawei lost access to many advanced components. Chevron has overtaken ExxonMobil as the largest US oil company by market value. It's the first time the Texas giant has been dethroned since it began as Standard Oil more than a century ago. Even so, they are both behind NextEra, the biggest producer of wind and solar power, is now the world's most valuable utility. That's your Bloomberg Business Flash. Matt, Anna.
Thanks very much for that, Laura. Now, London is facing the loss of its role as Europe's leading stock trading hub. Billions of euros in equity trading flow through the city every day. But according to CBOE Global Markets, more than half the volume is in shares of EU companies, which could go elsewhere after Brexit. Joining us now is Bloomberg's finance reporter, Viren Vagler. Good to speak to you, Viren. So why is so much stock trading at risk of leaving London? Give us some scenarios here, because this isn't being directly discussed. This isn't a stumbling block of the post-Brexit trade talks currently taking place. So why is this being caught up?
Yes, absolutely, Anna. to be precise, is $8.5 billion per day, dollars per day in EU stocks are traded through London. London has obviously built itself up over the years as a large hub with lots of different venues. Now, separate to the trade negotiation, finance is sort of being carved out, and little progress has been made on that front. So come January 1st, the EU may require EU stocks to be traded within its borders.
Is there any precedent? I mean, I feel like Switzerland would set a good precedent for this.
Yeah, so Switzerland has had the same issue, and last year it was experiencing the EU withdrawing equivalents for its main stock exchange, and so the EU did require EU stocks to be traded within its borders, and Switzerland retaliated and said, well, then Swiss stocks have to be traded in Zurich. So that created this sort of protectionism on both sides, and it created a split market and increased costs sort of up to about 20% higher for the end investor. So it's quite a situation where you're going back to markets 30, 40 years ago where it was very siloed and there was little competition. So it's kind of a bad news for investors.
Yeah, so what is the solution here then, Viren? Because investors will be mindful of the example you cite there of Switzerland and the cost of doing this business, the cost of trading in a more splintered environment where there are many settings. What is the solution? How do we look ahead here?
Well, the troublesome thing for the investors and the trading platforms in London is that they're looking at this and saying, well, this is a political move. Ultimately, the negotiations have to go well, whether it's fish to finance, there needs to be some movement there, because the UK rules in London are as strong as those in Europe. So really, this is a political move, and there needs to be some movement between the leaders at the top to ensure a good outcome for investors.
All right, Viren, thanks very much for joining us. Bloomberg's finance reporter, Viren Vegela, talking to us about the possibility of London losing basically half of its equities trading business. Coming up, the cheaper Brexit risk hedges may be found in Norway and Canada. We'll discuss the view from our MLive currency and rate strategist, Ven Rom, next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. Right now, we are 50 minutes into the trading day. You can see the DAX gaining about 0.6%, with the CAC 40 only up half that in Paris right now, and the FTSE up half that again. So we're seeing gains, but not all at the same level, and none really in size. Traders overnight paid close attention to the VP debate, with the U.S. election quickly becoming one of the biggest drivers of volatility in financial markets. But how much of a difference does the vice presidential showdown make in the direction of global assets? For a look at that, we bring in Danny Berger. Danny?
Matt, there's no doubt that traders really did want to see if this could impact anything, given that we definitely heard more policy stances from the two vice presidential candidates. But overall, what emerged from after the debate was the narrative can continue as it were. As Andy Brenner from that alliance put it, regardless of who's president, and for him it seems like Biden is the most likely chance, there's calls for more stimulus, more infrastructure, and that's where we get this picture of higher treasury yields and a lower dollar. So around this time period here is where the debate takes place, and we get these assets holding on to the direction that they had been before. It also keeps this sort of idea that the gap between Biden and Trump continues to expand, and markets really pricing in perhaps more of a Biden presidency. As Sebastian Gailey from Nordea put it this morning, it seems like markets are trading like we already have a Democrat in the White House. Now, if this was business as usual, there was one thing that didn't move in the markets, and it was after talk about foreign policy, specifically one comment Kamala Harris made. Let's take a listen to that.
The president's trade war with China. You lost that trade war. You lost it. What ended up happening is, because of a so-called trade war with China, America lost 300,000 manufacturing jobs. Farmers have experienced bankruptcy.
Look, the trade war, it has been a risk hanging over markets for some time now, but perhaps there's hope that this tail risk could be removed from the markets if Kamala Harris and a Biden presidency would mean a less aggressive and combative stance with China, and markets took that to heart. So this red line I have right here is when Harris makes those comments, and immediately afterwards, both in U.S. futures and in Japanese stocks, we see this lift. Those gains have been held on throughout the morning. So yes, not a ton of movement, but look, it is clear that traders are tuned in and looking for those policy comments. Matt, Anna?
Danny, thanks very much. Danny Berger with market reaction to the VP debate. Joining us now is Ven Ram, Bloomberg Markets Live currency and rates strategist. And Ven, I want to first ask you about something a little closer to home than the VP debate, and that's what we're seeing in European rates markets this morning. Greek yields dropping to new lows, Spanish yields falling on news of reduced borrowing requirements. Is this all to do with renewed confidence in the EU structure here, the EU fund, the recovery fund, and the ability to borrow as a bloc? Or what is going on?
Morning, Anna. You're spot on when you say this is all about the Euro's ECB's fiscal backstop and what it has meant for peripheral Euro area assets. And as we have seen in the past 2-3 months, bonds, whether they are from Italy or from Spain or Portugal or even from Greece, they've all been rallying, and that's because of the Euro area of the ECB's fiscal backstop. Adding to that, the ECB has been pretty active in the market with its pandemic emergency purchase program, and that is helping backstop bonds, and we have seen that rally continue through. Over the long term, this may not be sustainable, but in the short term, with the ECB's presence in the markets, these assets are bound to be bid. Anna, Matt?
All right, very interesting stuff. I want to ask you about the yuan and cheaper Brexit risk hedges. You can find them, I guess, in other countries closer to home.
That's absolutely true, Matt. In terms of the pound hedges, surprisingly, I did a study yesterday, and what that study uncovered was that the traditional hedges, i.e. the Euro GBP or cable, are not the pairs to go to because they are expensive in terms of volatility. But the volatility pricing is cheaper in terms, if you look at GBP NOK or GBP CAD. So those currencies offer much cheaper hedges. And for those portfolios that are sensitive to fluctuations in the pound, GBP NOK and GBP CAD may be the way to go. Matt, Anna?
Just briefly then, Ben, what about the sort of more vanilla way of looking at the pound, I guess, against the US dollar? We seem to get these headlines that maybe the market, we get a stream of headlines, don't we? And maybe market participants have learned not to jump on every one of them.
Absolutely, Anna. The fact that the pound is still fairly resilient and sitting merrily atop 129 against the dollar says something. And why is that? It's because the market is kind of smart enough to see through the bluster from both Downing Street and Brussels. Let's keep in mind that none of these stories that we have seen in the past week have cited a named official. In other words, they're all planted stories in the media, meaning they are nothing more than posturing. The fact that the pound isn't trading at a deep discount and is fairly resilient around 130 suggests that the market is optimistic that a deal will be done at the last minute in classic Brexit style. Anna? Matt?
Yeah, absolutely. We're all ready for the last minute scramble. Ben, thank you very much. Ben Rum, Bloomberg's Markets Live Currency and Rates strategist. That is it for the European Market Open. Surveillance is up next. This is Bloomberg.
Kamala Harris slams President Trump's pandemic response in an ever-tempered debate with Mike Pence. The VP hits back on taxes. The polls tell their own story. Joe Biden's lead is widening. Stocks push higher as Nancy Pelosi says she's open to an airline relief bill. The reflation trade holds on hopes of a bigger fiscal bump down the track. And the UK warns it will pull out of trade talks with the EU if no clear deal is in sight by next week. It comes as data shows London's days as stock trading hub could be numbered. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacroix here in London. Now, the markets are really telling a story of three things they're watching. First of all, it's all about central banks. Second of all, of course, it's politics. And then three, they're looking for the number of infected rising and some kind of programs to actually try and temper that. For example, relief to markets, relief to companies with furloughs. Now, we did have Senator Kamala Harris condemning the Trump administration's handling of the pandemic. What that means is that the widening polls for Joe Biden seem to have been taken in their stride when it comes to the markets. I'm looking at dollar. It's actually weakening. Travel companies leading gains in Europe on the Stoxx 600. And then I'm also looking at a couple of other things. Treasury yield steady and gold getting a little boost. Now, coming up, we speak exclusively to the Société Générale chairman, Lorenzo Binismaghi. Of course, we talk Brexit, we talk markets, and we talk central banks. Now, let's get straight to the Bloomberg. First Word News here in London is Leanne Garrett. Hi, Leanne.
Good morning, Francine. Europe is struggling to curb a resurgence of coronavirus, with France and Spain posting record daily increases. National politicians are leaning on local authorities to curb activity, fearing the economic impact of wider measures. The number of COVID-19 patients in intensive care in Paris has tripled since the start of September. Now, U.S. House Speaker Nancy Pelosi has signaled openness to an airline relief bill after the president stopped negotiations on a broader deal. But Pelosi is rejecting pressure to greenlight individual stimulus checks of $1,200. She says that is insufficient to address the challenges of COVID-19. The Federal Reserve looks set to discuss the future of its asset purchase program next month. Minutes from the FOMC's September meeting show an openness to alter or increase the program. Officials may also shift some bond buying away from shorter-term securities that could help lower long-term rates without adding to the overall level of purchases. And the World Trade Organization has whittled its choice for its next Director General down to two candidates. Bloomberg sources say members of the organization selected Nigeria's former Finance Minister Ngozi Okonjo-Iweala and South Korea's Trade Minister Yoo Mong-hee. They'll likely be formally announced later today. The WTO has never been led by a woman in its 25-year history. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the vice presidential debate took a more moderate tone than last week's presidential debate, but still featured its own sharp exchanges. Amongst many topics, Kamala Harris and Mike Pence sparred over the Trump administration's handling of the virus.
They knew what was happening, and they didn't tell you.
When I look at their plan that talks about advancing testing, creating new PPE, developing a vaccine, it looks a little bit like plagiarism.
You respect the American people when you tell them the truth. You respect the American people when you have the courage to be a leader, speaking of those things that you may not want people to hear, but they need to hear so they can protect themselves.
The reality is that we're going to have a vaccine, Senator, in record time, in unheard of time, in less than a year. The fact that you continue to undermine public confidence in a vaccine, if the vaccine emerges during the Trump administration, I think is unconscionable.
Now, for more on the vice presidential debate, let's go straight to Bloomberg's Kayleigh Lyons in New York. Kayleigh, the debate, okay, much more polite, but also much more focused on policy than the presidential debate last week. What were some of the key issues that were discussed where you could really see the difference between the two?
Well, the primary issue is what we just were hearing about, COVID-19, really an unavoidable topic from the very beginning when the moderator from USA Today, Susan Page, had to acknowledge President Trump's illness right at the start. And of course, the two candidates were 12 feet apart. They were separated by plexiglass. So the virus was very much front and center. Kamala Harris came out swinging, saying that the U.S. Trump administration's handling of the virus is the biggest failure of any U.S. administration in history, really putting Mike Pence on the defensive. He had to dodge a lot of Harris's attacks, but he also came after Harris on a couple key issues, one of them being the Supreme Court. He asked if they would pack the court or Joe Biden and Harris would support that. Harris did not give an answer to that. He also really was targeted on their energy policy, the Green New Deal, what it would do to American energy jobs. And China was another big issue that they disagreed on. Mike Pence saying Joe Biden is cozy with China, and Senator Harris saying that the Trump administration's trade war was one that they lost and that caused a manufacturing recession in the U.S. So very policy heavy. There was no doubt about that. Where the question comes in is whether or not it really made a difference this deep into the election cycle.
Thursday, today, 26 days out from the election. What do the polls tell us, Kaylee?
The polls tell us that Biden's lead is widening. Granted, if 2016 was any lesson, we can't 100% take what the polls are saying for what will actually happen come Election Day. But the Real Clear Politics national average puts Joe Biden ahead by 9.7 points. That's nationally. And then when you look specifically at several key swing states, Quinnipiac University put out a poll just before the debate that showed Biden leading in a number of them. Florida up by 11 points, Pennsylvania up by 13, and also leading in Ohio. And of course, Francine, those all key states when it comes to the Electoral College, which Biden would have to win in order to get the presidency, secure those 270 votes. And 538, which is a poll aggregator, says right now the odds of Biden winning the Electoral College are up to near 83%. So we'll see if that changes in the next 26 days. We'll see how that can change next week if indeed we do get a presidential debate, the second one. But of course, a lot of that depends on the trajectory of the president's own COVID case, Francine.
Kaylee, what could happen in the next 26 days? A lot of people already have cast their votes through mail-in. Right. A lot of people, have decided who they'll vote for. So, what will the 26 days left bring? Is it going to be more clashes? Is it personality? President Trump being pretty combative even whilst he's fighting COVID.
Well, it's a very fair question, Francine. A lot of ballots have already been cast, and it's not clear whether or not there's a lot of minds left to change at this point. But what could change in the next 26 days is that the president will be returning at some point to the campaign trail. He's, of course, been off the trail since October 1st when he got that positive COVID-19 diagnosis. Is he able to get back to those rallies, really build up a lot of momentum with his base, with his supporters? That could make a difference. And of course, we've gotten one October surprise in terms of that positive COVID diagnosis from the president, but there could always be another one. 26 days isn't all that long, but in politics, it's quite a long time, Francine.
Yeah, it certainly is. Bloomberg's Kaylee Lyons there in New York. Thank you so much. Staying up all night, really. So get some sleep, Kaylee. Great job. Coming up, YouGov were one of the most accurate pollsters in last December's UK election. So what's their prediction based on more than 68,000 interviews for the US presidential race? We'll speak to them next. And this is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Lost the trade war with China. Joe Biden never fought it. Joe Biden has been a cheerleader for communist China through over the last several decades.
The president's trade war with China. You lost that trade war. You lost it. What ended up happening is because of a so-called trade war with China, America lost 300,000 manufacturing jobs. Farmers have experienced bankruptcy.
Well, some of the highlights there of the U.S. vice presidential debate between Kamala Harris and Mike Pence. Now, 68,630. That's the number of interviews carried out so far across all 50 U.S. states by polling company YouGov. Its MRP technique, which works differently to most models, predicted the result of last year's UK general election within 12 seats. Now, it's the latest forecast for the presidency, and YouGov says Joe Biden is set to sail past the 270 winning line, taking 343 electoral votes to Donald Trump's 195. Well, joining us this morning is Marcus Roberts. He's Director of International Products at YouGov. Marcus, I mean, the polls really, so much focus on the polls and whether they're right. You have a slightly different methodology to what we've seen to American polls. Why do you think yours is better?
What we're trying to do is look at more data than ever before. As you said, nearly 70,000 interview respondents alone in this MRP model, which takes into account a variety of national polling data as well as individual battleground state data. And that's important because if we remember what happened 4 years ago when polling went a bit wrong, the national picture was correct in terms of the difference between Hillary Clinton and Donald Trump. But the battleground state picture, which determines who makes it to 270 electoral college votes and thus the presidency, was wrong. So what our model does, our MRP, is it combines that battleground state polling with national polling data and other sources of data to give us a more accurate picture based upon these very large data sets. And that's why we can say with greater confidence this time what the state of the race is, which seems to be a clear advantage to former Vice President Biden.
Marcus, what do you do with the people? And we hear that actually speaking to people close to the president, advisors and, aides, saying that actually a lot of these polls, and we didn't ask you then specifically about YouGov, but a lot of these polls are skewed because there are people that will vote for Trump but are too embarrassed to tell the pollsters.
The famous phenomenon of the shy Trump voter. Well, I think that if anyone who has noticed how the president's fans tend to respond to the president over the last few years, there's very little shy about them. Trump voters tend to be very proud of their voting intention. They tend to be very loud about their voting intention. If anything, we sometimes wonder if there might be something more of a shy Biden voter effect in this election, actually, with some Republicans who are a little bit concerned about passing a vote for the Democrats for the first time ever, but might be willing to do so. And so we're trying to poll more carefully into that as well. But as for the myth of the shy Trump voter, I tend to think that it's a convenient excuse both for pollsters who have got things wrong in the past and also for campaigns that might not be doing so well in the polls.
So there's not a female shy Trump voter, Marcus. I mean, if you break it down, it actually, the factions, so you have the Trump base, very vocal, very pro the president. You have the Democrats, progressive, okay, pro Biden. And then there's this elusive, how do the female voters vote because they found the president much too aggressive in the debate? What are your polls saying about that demographic?
Sure. Suburban women are some of the most important voters in this election. It was because President Trump was able to keep his margin of defeat with them narrower in 2016 than was expected against Hillary Clinton that he was able to win the presidency in the first place. But what has happened in this election is suburban female voters have been leaving the Trump bandwagon in their droves. They've been leaving it mainly because of the coronavirus crisis, but also our polls show because they don't like the tone or the tenor and the general unpresidentialness of much of the Trump presidency. That was manifested very clearly in terms of the debate last week. and the handling, or rather mishandling, of the coronavirus crisis that affected the White House thereafter only probably compounded that. And that's why it looks like instead of losing those voters by a narrow margin like he did in 2016, 68% of suburban women are currently looking upon the president with disapproval.
Marcus, talk to me about the swing states. Are they different to 2016? And again, is the gap between the two contenders widening?
The gap is widening, but there is a difference. We're in a period of transition for the Electoral College and what the battleground states are. The Rust Belt states, the Midwest, those traditional battlegrounds of Iowa, Ohio, Pennsylvania, Wisconsin, Michigan are still very important to the election, but you no longer need to run the table in them in order to win the presidency. Instead, you need to win most, not all. And that gives the Biden campaign the opportunity to win, say, Michigan and Wisconsin and Pennsylvania, and add some new states. Opportunities like Arizona, opportunities like North Carolina, maybe even Florida. And we see just this in the last week or so, the Biden.
Marcus, how comfortable or how confident are you that the people that you poll will go and vote? So if there's bad weather, if they're worried about COVID, you know, could that change because you really have to energize your base to make sure? I think we've lost actually Marcus Roberts. I'm not sure whether Marcus is still with us, but we have a couple of technical difficulties, but really a fantastic insight there from YouGov. So we'll get back to Marcus as soon as we can to give you a bit more insight into this race. 26 days away. I mean, time's really flown. And then, you know, as Kaylee Lyons was saying, a lot can happen in 26 days. Now, some market moves to bring to your attention. Regeneron gains in pre-market trade. It comes as a group says it has asked federal regulators to authorize its antibody treatment for COVID-19 for emergency use. President Donald Trump receiving the antibody cocktail last Friday under a compassionate use program after becoming sick with the coronavirus. So we'll have plenty more, of course, on Regeneron, pre-market gaining more than 5%. Coming up, is London facing the end of its dominance as a stock trading hub? More than half of shares traded in the capital are in European companies. A new report also say that business could be at risk. So we'll have the latest on Brexit next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Citigroup is paying a $400 million fine and must seek government approval on any major acquisitions. That is after regulators issued the bank a rebuke for persistent problems with its risk controls. Officials are also reversing the right to require changes in senior management if the company doesn't act quickly to address the shortcomings. Chevron has overtaken ExxonMobil as the largest U.S. oil company by market value. It's the first time the Texas giant has been dethroned since it began as Standard Oil more than a century ago. Even so, they are both behind NextEra, the biggest producer of wind and solar power, is now the world's most valuable utility. EasyJet has lost over $500 million this year through September. The pandemic is wreaking havoc on the budget carrier's summer schedule. The airline is scrapping its dividend and expects to fly about a quarter of its typical capacity during the final 3 months of the year. It's calling on the government to step in with even more aid. And the US is exploring restrictions on billionaire Jack Ma's Ant Group as well as Tencent. Sources tell Bloomberg that's over concerns a digital payment platforms threaten US national security. The move risks infuriating China and disrupting Ant's IPO. That may be the world's largest ever. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Brexit negotiations could break down within days after the UK warned it will pull out of EU talks if there's no clear deal in sight next week. Now, progress on the key sticking points of state aid and fishing rights appears, from the outside at least, to be slow. Meanwhile, a report by CBOE Global Markets says that London is facing the loss of its role as Europe's leading stock trading hub. Now, it says more than half of the volume is in shares of EU companies, which could actually go elsewhere after Brexit. So for both on these stories, we're delighted to be joined by our Brexit editor. He's Edward Evans. Ed, first of all, thank you so much, as always, for coming in. But, you know, what's really going on behind the scenes? It's unclear whether it's stalled but still progress, or whether, 15th of October, that's it, there's no deal, and the UK leaves under WTO agreement.
Okay, to take the two questions there, I think on the first you've got to separate the brinksmanship from the briefings and the various political leaders from what is going on in the negotiations. On that part of the discussions, you can begin to see now some signs of progress on state aid and some on fishing. But, and it's a big but, to get to a deal, political choices need to be made by political leaders, and we're a long way from that point. The October summit on October 15th, that is Boris Johnson's deadline, not to get a deal, but to see that there is one that is possible there. The talks could then go on a little longer. The point with that summit is it's Johnson's own self-imposed deadline. It's not set in stone, and it's quite clear the EU are perfectly prepared to let these negotiations drag on to the end of the month, possibly even November. The one deadline that hasn't shifted and won't shift in all this is December 31st. That's when the transition period ends and when Britain leaves the single market and customs union. The problem is they need to actually ratify and implement a deal by then. That's why you're seeing people trying to get the deal at least signed and agreed by the end of October.
Is it 50-50 on whether we get a deal or not? Or is it more likely then we don't get a deal, or is it just impossible to say?
To get a deal, there needs to be a choice by Boris Johnson on what state aid rules he is prepared to follow. Now, initially the EU wanted the UK to sign up to the EU state aid regime and any future changes, and it looks as though it's pulled back from that position. But what it needs from Johnson is a statement of what the UK state aid rules have been, and so far those have been pretty vague. So if Johnson wants to make a move, he will need to put something forward on state aid. Now, the other big stumbling block is fish, and there the problem is French President Emmanuel Macron, where he is the stumbling block to a deal. The French have pushed very hard to keep the existing quota system that favours French and European fishermen over British fishermen after the end of the transition period. Now, for the British, this is an absolute red line. Brexit is about taking back control of British waters. It is clear you're beginning to see Barnier, who's briefing the ambassadors in Brussels yesterday, that he wants the EU to soften its position. So if you get a deal, if you begin to get to a decision on state aid, fishing will slot in very quickly after that, I suspect.
Ed, thank you so much. Ed Evans. Will get back, of course, to Ed on Brexit and, of course, what it means for trading hubs. Up next, we talk more about the economy. This is Bloomberg.
Of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Senator Kamala Harris and Vice President Mike Pence faced off last night in their only debate of the election cycle. Harris condemned the Trump administration's handling of the pandemic, calling it the worst failure in U.S. government history. Pence hit back at the Democrats' tax plans and questioned if they wanted to pack the Supreme Court. President Trump has credited Regeneron's experimental antibody treatment with his apparent recovery from coronavirus. He has announced his intention to authorize its emergency use and provide it free to Americans. The president added he believes his brush with the virus was a blessing from God because it gave him first-hand experience of the therapy. And here in the UK, the government is drawing up rescue plans for businesses struggling to cope in areas forced into local lockdowns. Bloomberg sources say no firm date has been set for rolling out the package, and it depends on any changes to the rules. About 17 million people are in areas with stricter virus restrictions. Global news 24 hours a day, on air and a Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the president of the ECB is warning on the strength of the euro area economy. Christine Lagarde says a V-shaped recovery will allow, or will all we all longed for and hoped for, will develop a second arm. Now, she says France and Spain are faring particularly poorly. The comments, of course, come as Europe battles a second wave of coronavirus. Now, France has reported a record number of new cases, and Italy's infections spiked to the highest level since April. Joining us this morning for an exclusive conversation is Lorenzo Binismaghi. He's chairman of Societe Generale. Mr. Binismaghi, thank you so much for joining us. You were for many years also on the governing council of the European Central Bank, and so you understand, you know, everything there is to do between markets, the economy, and I'm sure, like most of us, you're now a virologist. How worried are you that the recovery will be very uneven because we just don't know how these infections will develop?
Well, animal spirits are the key issue. I mean, if President Trump is right that we really have a medicine that is available to everybody that can make it easier to recover, that would certainly be a game changer. We have to be, of course, doubtful, but we're all expecting the vaccine to arrive or some breakthrough in terms of medicine that can give an horizon to the end of this crisis and accelerate the pace of the recovery. Without these signs, the risk of a second wave and people having to stay home longer, working more at home, those who can, and more businesses shutting down, then the pace of the recovery is likely to be weaker than we thought, with, of course, then problems accumulating and maybe the need for more stimulus, which is now the debate, I guess, both in terms of monetary policy and fiscal policy.
But what have you learned about the kind of recovery we're seeing? So many people say it was actually, you know, the rebound was quicker than we were expecting, but the scarring could be deeper because there are just industries, you know, companies that will go out of business and won't come back.
Well, the rebound or the end of the fall, of the free fall that we saw in Q1 and Q2, I think that's the beginning, but there are many uncertainties about Q4 and especially 2021, because that's where we should need really a recovery in terms of consumption and investment. When we look from the bank's perspective, we don't see yet a sharp increase in non-performing loans or in the cost of credit. Actually, it's doing better than we thought. But of course, this is still early. We have to see how the risks are coming, how businesses, and the health of businesses is going to develop going forward. So I think it's still too early. But of course, the concerns about the second wave are dominating, I think, the economic perspectives.
So are we going to see much more from governments? You know, again, it seems that all central banks are saying, look, we can do more, but actually be more useful if fiscal policy was a bit more robust at this point.
I think this is the current debate in the US and in Europe, that maybe more is needed, more stimulus on the fiscal side. Europe is discussing the recovery fund, I mean the next generation EU as it is called. The agreement is not yet finalized, but there is a lot of pressure to try to close this issue, because otherwise markets will start to worry again. And monetary policy may need to do more also in terms of convincing markets that everything that is needed will be done to avoid a depression or a deflation. I mean, inflation rates in Europe are negative. And this is worrying because it is disanchoring inflation expectations, and the risk of entering into a loop, a negative vicious circle are rising again. So the discussion is again, does economic policy need to do more than what has been done so far?
So, is there anything that can actually be done to try and avoid the Japanese, example of deflationary pressures? Or overall, because we're doing quite a lot in terms of stimulus, and because, there's quite a lot of central bank action, and because a rebound could be quicker once we find a vaccine, you see a risk of inflation?
I think the European move to this recovery fund has been a game changer. It has certainly stabilized expectation. I think the risk is that it's coming too late in the second half of 2021. So what needs to be done is first to take the decision quicker and maybe to front load part of it. I think markets are now seeing the risk that most of the measures will come too late when the recovery is suffering. So we need to strengthen the recovery and to upfront some of the measures that are needed in this phase to accelerate, in particular, public investment, and that create a multiplier effect on the economy and maybe also contribute to stimulate private investment.
Do you worry about negative rates and negative rates staying, here for much longer and hurting the financial system?
Well, I think that implicitly, Christine Lagarde has said that, hadn't the ECB entered QE, it should have reduced interest rates to a much lower level, and this would have created negative effects. So the ECB, I think, is starting to recognize that beyond the very short-term effects, negative rates are producing a negative impact on banks' profitability, and in the end, on banks' ability to lend. I mean, we have to look at the combination of monetary policy, but also prudential regulation, and how the combination of the two are creating the environment which really enables banks to support the economy. And if I look at the combination of the two, negative rates and some of the prudential regulation, in particular concerning the ban on dividends, which may be correct in the short term, but if it remains, it creates uncertainty about the willingness for investors to stay in the financial system as investors. And so there is a risk of fleeing away from the financial system, and this is not good for the banking system and for the real economy, because it does not provide enough capital for the banks to support the economy.
So is this, what's the prescription to deal with that? And are regulators and policymakers aware of this risk?
Well, I think what markets need is certainty. For investors who maybe have the intention to come in and invest in the financial system, what are the rules for distributing dividends? I mean, unless they see certainty, they will invest in other sectors where there are no bans on dividends. So I think we need clarity as soon as possible. Maybe it was correct for 2020 not to distribute dividends immediately, but for 2021, I think it is essential to have the possibility to provide investors with some return, so that they can come in again in the financial system, support the financial system, the banking system, and this will enable the banking system to support the economy, to provide more credit. So we need certainty as soon as possible on what are the rules of the game.
Mr. Binismaghi, thank you so much. Of course, here's Lorenzo Binismaghi from Societe Generale. He stays with us. We'll talk a lot more about market volatility. We'll touch on Brexit, and we'll talk about the U.S. as well. Coming up, we hear from the EU's new trade commissioner on a deal with the U.S., as well as on the WTO candidacy. Don't miss that interview. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the search for the World Trade Organization's next Director General has been whittled down to two final candidates. Sources say they are South Korea's trade minister and Nigeria's former finance minister. Now, that means the body is set to get its first female leader. We spoke to the new EU Trade Commissioner, Valdis Dombrovskis, on the candidacy, as well as about a trade deal with the U.S.
For us, it's important that we have experienced candidate with political experience, with political weight, which can actually bring WTO member states to discuss things, including at political level, and to make compromises. And we need a candidate which is dedicated to WTO reform, and there many things need to happen. So first, we need to revitalize a negotiating function of the WTO. We recently have not had any multilateral agreements, and many things are done either bilaterally or at best plurilaterally. Appellate body is not functioning, so we need to unblock this situation. And in generally, we need to get WTO procedures more in line with the current challenges, also being able to deal more efficiently with issues like industrial subsidies and transparency thereof, forced technology transfer, intellectual property rights. So there are many things which indeed need to be dealt with.
Right, and there's also a question mark around what is going to happen with Boeing, that potential retaliation from the EU when it comes to the U.S. What can you tell me about that?
Well, on this, obviously, we are in close contact with U.S., and our first preference is to have a negotiated settlement where U.S. is withdrawing their tariffs. Then we will not have to introduce our tariffs, and we rather discuss how we deal with disciplines in the area of civil aviation. Of course, if we will not see engagement from U.S. side, and we will not see U.S. withdrawing their tariffs, we'll have no choice but then to impose our tariffs in line with the WTO ruling.
Well, that was Valdis Dombrovskis, the EU new trade commissioner. Let's get more with Lorenzo Binismaghi from Societe Generale, who's with us for an exclusive conversation. Mr. Binismaghi, there was Mr. Dombrovskis there talking about WTO and a trade deal with the U.S. The more immediate threat, of course, to the markets, what happens on November 3rd in the U.S. How much volatility do you think we'll see in the markets from now until November 3rd, but maybe even possibly beyond?
Well, there are at least three factors of risk, one or of uncertainties. One is who will win the presidential election, but maybe even more important, will we have a result on November 3rd or 4th in the morning, or how long will it take to get a result? And the third question, which is maybe even more important, is what's going to be the combination of presidential election and Senate election. That is, it will make a big difference if, for instance, we have Biden winning the presidential election with a Republican Senate or Biden with a Democratic Senate. These are going to be big factors determining the policies that will be implemented in the U.S. And of course, the fourth uncertainty, how strong will Biden be to select some of the key persons in his administration? For instance, who will be the U.S. Treasury Secretary? Could it be Elizabeth Warren, for instance, or somebody else? So these are the uncertainties, I think, that are making the markets very nervous at this stage.
But is anything priced in at the moment, or again, is it just volatility because the market is looking at all the central bank action and they're just waiting for more stimulus and they're just waiting for politics to quieten down? Like, what is the market, beyond politics and beyond what you've laid out very clearly looking at?
Well, I think that's, as I mentioned, in the end, the Senate election is underestimated maybe in the public comment. That is the key issue, because the ability of Biden, if he's elected, to implement a real change in policy, a real stimulus, will depend on his ability to work with the Senate. And clearly, a Democratic Senate would make a big change. So markets are looking very closely at the different races in the different states where senators are up for election, and as the markets estimate probability of a Democratic Senate, I think they are getting more bullish, I think, with respect to the possibility of a package being adopted relatively quickly to stimulate the economy in the U.S.
Mr. Binismaghi, there's a very clear narrative in London that despite, no matter really almost what happens because of Brexit, if there's a deal or no deal, because of the uncertainty that we've had so far, London as a financial hub will lose out significantly because a lot of the banks will have to move their trading platforms outside, and that will have possibly an impact on the consumer or the customer at the end. I mean, how do you see London evolving?
Well, I wouldn't, call the death of London prematurely. Clearly, uncertainty is not a good thing. But what is emerging over time is that the concept of equivalence, that is, being in London and working on the same rules as on the continent, is going to be more and more difficult. We've seen the experience with Switzerland, with other countries, and of course it is a friction. It creates a friction with the concept of sovereignty that the UK political environment is so keen in defending. So there will be tensions, even if we have a deal at the end of the year. Showing that equivalence is being implemented across the channel is going to be challenging over time, and will create friction. So this uncertainty will inevitably lead financial institutions to try to move people to the continent and to move activities to the continent, avoiding this uncertainty and these continuous discussions about equivalence of norms and regulations all the time. So I think it's going to be a trend more than a disruptive change that will penalize London.
But are banks deciding now, or are they waiting to see the outcome?
I think they have already decided, partly, and they are continuing to make changes. And my impression is that they are some are still waiting, but after the agreement is done, at the first incident, at the first discussion about how to implement the concept of equivalence, there may be some acceleration in moving activities to the continent.
Thank you so much, Mr. Lorenzo Binismaghi there from Societe Generale, joining us for an exclusive conversation. We touched on a number of things. Thank you for your time. Now, coming up, how much of a difference did the VP showdown make in the direction of global assets? We take a closer look at markets next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, traders overnight paid close attention to the debate with the U.S. election quickly becoming one of the biggest drivers of volatility in financial markets. But how much of a difference did the VP debate or VP showdown make in the direction of global assets? Well, for insight is our Danny Berger. Hi, Danny.
Hi, Francine. Well, political risk, the election risk, certainly on the front burner, but without any fireworks after last night's debate. We saw the status quo, really the market narrative that's been building over the past couple of days, enable itself to continue on. That is hopes for stimulus and a widening chance of Biden winning the presidential election in the polls. So you can see things like 10-year yields continued their chart higher, a tiny bit softer this morning, and the dollar moving lower. And as Andy Brenner from Not Alliance put it, regardless of who wins the election, he thinks that we're going to get more stimulus, and that's what's moving this year. But look, there was one reaction. It came after a comment from Kamala Harris. Let's take a listen to that.
The president's trade war with China. You lost that trade war. You lost it. What ended up happening is because of a so-called trade war with China, America lost 300,000 manufacturing jobs. Farmers have experienced bankruptcy.
Those comments causing a rally in U.S. stock futures. Francine?
Thank you so much, Danny Berger, there with the very latest on asset classes. Now, Bloomberg Surveillance continues in the next hour. As always, Tom Keene joins me out of New York on a conversation also with the Dallas Fed President. Robert Kaplan is a little bit later on, and of course, Tom and I will focus on the VP showdown. This is Bloomberg.
Day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
Kamala Harris slams President Trump's pandemic response in an even-tempered debate with Mike Pence. The VP hits back on taxes. The polls tell their own story. Joe Biden's lead is widening. Stocks push higher as House Speaker Nancy Pelosi says she's open to an airline relief bill. The reflation trade holds on hopes of a bigger fiscal bump down the track. And the UK warns it will pull out of the trade talks with the EU if no clear deal is in sight by next week. It comes as data shows London's days as a stock trading hub could be numbered. Well, good morning, everyone. Happy Thursday. Happy post-VP Showdown Day. This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, a lot of people enjoyed the debate yesterday because it was just a little bit less acrimonious.
Yeah, I'll say.
Actually, a lot less acrimonious than the presidential debate. But it does seem, people got a chance to speak more, and we actually heard about policy. It's not translating into European stocks that much, but of course, it could move the polls, so that's what we're watching out for today.
Francine, I don't agree. I agree with you. It's secondary or tertiary, but at the margin with a lift in the markets today, yes, off presumed stimulus, government to the rescue and all that, I really wonder if it had a little bit of a good feeling to it versus what we've seen over the last 2 weeks.
I don't know. Do the markets move on just a good feeling about, meaning what? It's less acrimonious.
It's a POCO.
Maybe?
You don't remember POCO, do you?
Maybe.
Timothy Bishop. It's a good. It's a good feeling.
Is that a
to
dance?
know.
No. All right.
It's a
Yeah, it
good
is a dance.
feeling to know. Whoa. POCO.
It's a good morning when
I'm
Tom,
thinking
when
71.
Tom sings to me on air.
1971,
I love that.
72.
We'll get back to the POCO.
It's a good
but
feeling.
Before that, let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. It was a debate heavy on policy without all the dramatics of last week's presidential event. Vice President Mike Pence and Kamala Harris squared off last night in Salt Lake City. Not surprisingly, the first question had to do with the coronavirus.
You respect the American people when you tell them the truth. You respect the American people when you have the courage to be a leader speaking of those things that you may not want people to hear, but they need to hear so they can protect themselves.
I mean, quite frankly, when I look at their plan that talks about advancing testing, creating new PPE, developing a vaccine, it looks a little bit like plagiarism, which is something Joe Biden knows a little bit about.
Pence said President Trump has put the health of the American people first. Harris said he's forfeited by right to re-election by the way he's handled the pandemic. And President Trump called his case of coronavirus a blessing from God, and he credited Regeneron's experimental antibody treatment for his apparent recovery. The president says he plans to authorize emergency use of the treatment and provide it free to Americans. The Trump administration plans to impose more sanctions on Iran's financial sector as soon as today. The goal is to further choke off its economy from the rest of the world. Bloomberg's learned the U.S. could blacklist as many as 14 Iranian banks that have so far escaped restrictions. And Hurricane Delta is now taking aim at Louisiana after hitting Mexico. The storm slammed into Cancun resort area, knocking out power and triggering a dangerous storm surge. Delta has weakened to a Category 1 hurricane, but it's expected to strengthen before coming ashore in Louisiana tomorrow. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities right now. Let's look at it. Futures up 15, Dow futures up 110 off the Bloomberg terminal. The VIX under a 28. To me, that's important. 27.95 on the volatility index of the Standard & Poor's 500. Yields don't tell me much. They're in a little bit, but nevertheless, we're in that new regime of higher yields. Again, claims at 8:30 today. Oil lifts above 40 the barrel, 40.46. And Francine, you know I'm on the lira watch. I do not think this is a backstory. Turkish lira unravels 7.94. You tell me, Francine, where the tip point is for Mr. Erdogan. I can't figure it out.
Yeah, I mean, if only we knew, Tom. This is, the million-dollar question that a lot of market participants are trying to figure out. The dollar weakening, which helped boost commodities, including oil and gold. Treasury yields pretty much steady. I'm looking at European stocks. Look, they're rising a touch, and that's led by travel companies, but we are also expecting extra restrictions. For example, in France, we're expecting Emmanuel Macron to announce those today. So there's a bit of there's no urgency to the market like we saw in the last couple of days. Maybe there's a bit of a wait-and-see moment. Now, the vice presidential presidential debate took a more moderate tone than last week's presidential debate, still featuring its own sharp exchanges amongst key topics. Candidates Kamala Harris and Mike Pence sparred over the Trump administration's handling of COVID.
And we need to save our country. And Joe Biden is the best leader to do that. And frankly, this administration has forfeited their right to re-election.
When I look at their plan that talks about advancing testing, creating new PPE, developing a vaccine, it looks a little bit like plagiarism.
We are delighted to talk politics with Greg Valliere. He's AGF Investments Chief U.S. Policy Strategist. Greg, thank you for joining us. I'm curious about the shy Trump voter. Is he or she showing up in the polls? There seems to be a belief that this could actually be a myth.
You're absolutely right. Good morning. It's entirely possible that the poll takers aren't reflecting that. It's entirely possible that the Biden lead could be even wider.
Greg, overall, there seems to be so many people decided already on who they vote for.
Yeah.
Does anything in debates or even, the White House being engulfed by COVID make a difference?
Well, I thought last night was kind of interesting. It probably was a tie, didn't move the needle much, but both candidates made their closing arguments that we're going to hear over and over for the next month. On the Democrat side, it's all about health care, pre-existing conditions, the handling of COVID. On the Republican side, it's that the Democrats' prescriptions are too radical. Those are going to be the two arguments I think we'll hear over and over.
Greg Valliere, good morning to you. I went to the source in Salt Lake City, the Deseret News, and I like how they covered it. Obviously, a Republican tone out in Utah, and they said it was mostly civil and it lacked substance. The game change for me, Mr. Valliere, is it focuses around the president's performance in the debate and, frankly, what we saw from Mr. Giuliani yesterday on Bloomberg's surveillance. With the civil discourse that we saw last night, is there a demand by the public to shift from the venom that we've been hearing or not?
Yes, I think so. And I think that's one of the reasons why last night was fairly civil. But the Republicans are going to run out of time pretty soon. A lot of people have voted. A lot of people have made up their minds. And I must say, Tom, in the last 48 hours, the move in the polls has been quite remarkable.
I mean, Greg, you've been such a student of this and such a value with your note at AGF every morning. What fascinates me is the president within his bubble, within his milieu. We all have bubbles. There's a Tom Keene bubble. I hate to say it, Greg, there's a Francine Lacroix bubble, but we're all in our bubbles that we're in. When he got out of it in the first debate, it was painful for all. Do you anticipate that if there's a second debate October 15th?
Yeah, I think the same thing will happen. I don't think he's learned any lessons. He could have come out of his illness like Boris Johnson, a bit chastened, a bit more empathetic, and he didn't. And I think Trump wasted a really golden opportunity.
Greg, talk to me a little bit about the swing states. Are they changing? Are they, is it different from 2016? And what are they telling us at the moment?
Well, you make a good point, Francine. There are similarities to 2016. The Biden lead is roughly the same as Hillary Clinton's lead 4 years ago. But the swing states have changed, especially Pennsylvania. That's the one to watch. Michigan would be the second one to watch. In both of those states, it looks like Biden is starting to pull away. That's a big deal.
I mean, does the fact, it seems to me, Greg, and correct me if I'm wrong, that actually, the female voters, females, especially in suburbia, are key to winning or losing this election. What do they care about? And if it's healthcare, the fact that the president and those around him have COVID, does it make them vote for someone else?
It's a huge issue of pre-existing conditions, the Supreme Court, and to my astonishment, Joe Biden has higher numbers with women than Hillary Clinton did. If Biden wins, it'll be the female vote will be the key factor.
Greg, I'm stunned by Florida. You mentioned Pennsylvania. I get all that. I get the battleground states. But come on, Florida, 45-45. Is the vice president, has he spent enough time down in Florida going after the votes he needs, particularly the Hispanic vote?
No, he hasn't. And that's been a big flaw starting with their convention. They seem to ignore Hispanics.
Why? Why are they doing that?
I can't figure that out, Tom. It's a mystery. They should spend a lot more time. They could win Florida. Now, that said, they don't have to win Florida. Biden can win without Florida. I think the big story in Florida and Arizona with senior citizens is that older people are really angry at Trump's handling of COVID.
Okay, what's your plan here for the next 25 days? I mean, you write an immediate note every morning. I get it. You're going to write about tomorrow. Yeah. Maybe you're going to write into the weekend and the Sunday talk shows. What's the Vallier plan or prognosis, if you will, to go medical out to the first Tuesday of November?
Well, I think the subject has to change for the Republicans to have any chance. Two things. I do think we might get something on stimulus, not a big bill, but something that Trump could call a win. The other thing is, let's not forget the Supreme Court hearings start next week, and that could spin to the advantage of the Republicans. They need to change the subject.
Greg, it's all, well and good to have polls, and we trust the polls as long as people show up and vote. Who has the most energized base? So let's say there's a second, that COVID becomes much more scary for other people and they haven't put in their votes by mail. Let's say that it's raining on November 3rd. Who's going to show up and vote?
The Trump voters would show up in a hurricane to vote for Trump. And that's an important factor. That's one reason why you can't say it's 100% chance that Joe Biden wins, because I question whether Biden's supporters are as enthusiastic as the Trump supporters.
Can Kamala Harris energize them?
I think she helps with African-American votes. She might add half a point to Florida, Georgia, North Carolina. She might make a little bit of a difference. She didn't hurt herself last night.
Greg Vallier, thank you so much. Way too early in the morning for you. Thrilled that you're with us. With AGF, and again, we protect the copyright of all of our guests. Go to AGF to get Mr. Vallier's powerhouse morning note. It is a required read as well. On the political debate, she has had often attendance with Mr. Weston. I think she's like a panelist or a contributor. I'm kidding. The Speaker of the House, Pelosi of California. This would be with David Weston, Balance of Power this morning. No doubt messaging the stimulus presumed for the airline business. Futures advance up 15. Stay with us from London. From New York, this is Bloomberg.
I'm placing a new order to sell short Japanese yen at 105.974. 105.974. Okay, new order placed to sell short at this price.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Bloomberg Surveillance, good morning, everyone. A most interesting October. We welcome all of you. Francine Lacroix in London. I'm Tom Keene in New York. Crisis correction in the equity markets, and then it wasn't. We barely got to 10% on Standard & Poor's 500. I looked this morning, we're down 3% from record highs. On the Dow, we could almost get to a record high today with a nice lift in the Dow futures. Dow futures up 113 right now, the VIX 27.92. Let's sort this out. Peter Dixon with us with Commerce Bank, blending in.
Position opened short at 105.974.
Persistency of revenue and the expectations or reset that we will have in earnings?
I think the concern is that as the economy slows from the post-recession rebound that we saw in Q3, we're going to see a significant slowdown in earnings growth. And that, I think, rather puts a lot of pressure, or certainly raises the headwinds for equity markets going forward. The 2021 is therefore going to be the year of cost cutting, and the markets will reward those companies which cut their costs in order to maintain earnings, perhaps more heavily than those which continue to struggle to do so. So I think it's going to be a fascinating environment for investors as we look ahead to 2021. Who's going to react quickest to the concerns?
How do you correlate the economy and gross domestic product into a guess on what the equity markets will do?
Well, it's become highly difficult in the current environment. I mean, we saw this massive plunge in Q2, a big rebound in Q3, and the equity markets kind of, foresaw that. They continued to trade up during the summer. I think if you look at where we are now, I think what the equity markets are telling us, it's right, because I think at the moment we're to GDP rather than the other way around, is that, the markets are suggesting that the next few months are going to see fairly static activity in large parts of the world. The GDP rebound in the fourth quarter in the US may not be particularly strong. I think in large parts of Europe it could even be, we could even be looking at a flat number. So I think that's what the market's telling us. Whether they're right, of course, remains to be seen, but it's certainly not a view I would want to bet against.
Peter, how do you look at the election in the US? What is the market pricing in? How could it move?
Well, I mean, I think markets generally are pricing according to the, what the opinion polls are telling us. So all the available information, I think, is already in the price. But obviously, as we get closer to the election, as the polls move around, we'll start to see a little bit more volatility. I mean, I think my view is that markets can deal with whatever's thrown at them. But what they don't want is additional uncertainty. So we don't want a situation where the election result is in doubt for days or possibly weeks, after the actual big day itself. Because that way, given that we've already got the concerns about COVID and where the economy actually is, that way madness lies, and you could see some very, very dramatic bounces. I mean, obviously, the Trump camp, I think, will probably be positive for markets, certainly more so than Biden, some of whose tax proposals probably won't be particularly well received. But as I said, markets can deal with anything which is thrown at them. It's the uncertainty that kills us.
Peter, the other thing that we were, trying to figure out with Tom is there was this House report on the big tech giants and, what they could do to curtail them. But actually shares, hardly moved on the back of it. Is it a danger? Or is it something that you're worried about, like the repricing of certain technology stocks? Or is it a story for mid-2021?
I think you're right. I think it's a story for 2021. I mean, at the moment, governments have so many other things to worry about. That taming the tech giants is not high on the list of things to worry about. I think it will come. I mean, I certainly think that certainly the US has a habit of intervening when it comes to antitrust. I mean, we look back 40 years to the AT&T scenario. So I certainly think that it's something which will come about in the course of the next presidential term, but I'm not sure that it's a problem for now.
Peter Dixon, how do you respond to investors going, I'm scared stiff of the cacophony of noise and the uncertainties, plural, that is out there, in investing the next dollar in the equity market. How do you respond to that?
I mean, my view over the course of recent months has always been the same. I mean, where else are you going to put your money? You can put it under the bed, but that's not going to generate much return for a long time to come. I think you have to remain invested in the equity market, and I say that not particularly because I'm an equities focused guy. I genuinely think it's the one place where you're going to get some decent return. Obviously, you have to look through the noise, and I think you're going to have to live with that for a while to come. But if you're looking for a 12-month, 2-year horizon, that's where they're looking.
Peter Dixon, thank you so much. We're going to continue here with Mr. Dixon here. The equity market's really quite the surprise. You look at the news flow, folks, absolutely extraordinary with the stock market, 3421 SPX, Dow 28,285. That would be a considered desire to speak to Abby Joseph Cohen. We will do that with Goldman Sachs. Hugely anticipated interview this morning with Abby Joseph Cohen. Yes, on the equity markets. Yes, on our stock call. But so much more to discuss. From London, from New York, stay with us. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They move the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
A sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Facebook is tightening its rules on content involving the U.S. presidential election. It's temporarily banning political ads once voting ends. Facebook is bracing for a contentious election night that may not end with a definitive winner. JP Morgan Chase is committing billions of dollars to fix the racial wealth gap. That includes a pledge to underwrite 40,000 home loans for Black and Latino borrowers over the next 5 years. The bank also will change how its own executives' progress on diversity is evaluated. And it hasn't been this cheap to rent an apartment in Manhattan since 2013. Last month, listings tripled from a year earlier to the highest on record, and the median rent fell 11% to a little more than $3,000 a month. The coronavirus has given renters few reasons to sign leases. And that's your latest Bloomberg Business Flash. Tom, Francine.
Ritika, thanks so much. I'm going to go a little bit of the obscure data here right now. Futures up 14, the VIX 27.93. I really want to point out a real yield, 0.9423. One of the great stories here with the equity recovery is real yield has been some Nolan, negative 1.0%, and we've come back up 0.90, and we're sort of middle of the ground there on the 10-year view of the real yield, negative 0.94. Turkish lira, we're not out to an 8 lira per dollar. I don't know what that means, frankly. 6 lira was shocking, 7 lira, and now it's 7.93, the agony of Erdogan's Turkey. Francine?
Tom, we should spend a bit more time, of course, on Turkey and some of the decisions out there. I know that, there was an ECB study also on it, and of course, on central bank independence. Now, stocks are up on hopes of a stimulus in the U.S. Travel companies are leading the gains here in Europe. And I'm also looking at Regeneron, rising some 4.9% in pre-market after President Trump's endorsement. Coming up on Daybreak Australia, the Dallas Fed president, Robert Kaplan, joins us for an exclusive conversation with Kathleen Hayes. This is Bloomberg.
कोरोना फैला हुआ है चारों तरफ। इस कोरोना के दौर के अंदर ये प्रदूषण हमारे लिए जानलेवा हो सकता है। एंटी स्मॉग गन्स काफ़ी बड़े स्तर के ऊपर जगह जगह लगाई जा रही है ताकि इसको रोका जा सके, और भी बहुत सारे कदम उठाए जा रहे हैं एंटी डस्ट कैंपेन के तहत।
Time will never come back. That was indeed a heaven view. There was less pollution. But now festive season is coming closer day by day. And again there will be same pollution, same problem.
I think what we've seen during this period of time is that communicating via media video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The president's trade war with China. You lost that trade war. You lost it. What ended up happening is because of a so-called trade war with China, America lost 300,000 manufacturing jobs. Farmers have experienced bankruptcy.
Lost the trade war with China. Joe Biden never fought it. Joe Biden has been a cheerleader for communist China through over the last several decades.
Vice President Mike Pence and Senator Kamala Harris are squaring off in the vice presidential debate in Salt Lake City. Let's go back to Peter Dixon of Commerzbank. And Peter, we touched on exactly what the elections mean for the stock market. What does it mean for dollar, and how does that impact equities you follow?
Well, I mean, I think in terms of the currency markets, so far it's been very much a holding pattern. I mean, the dollar, was picking up ground over the summer. It seems to have lost a little bit now. But it's very much a sideways trade, and I think the markets are waiting to see which way the election chips fall. My guess is that the dollar remains fairly well bid, because if you look at the alternatives, say the euro, the economy is clearly losing momentum. The COVID problems are getting worse rather than better. I mean, the death rate is rising across the region, whereas in the US it's falling. Admittedly, it's still high, but it's falling. And I think, therefore, that the likelihood is that over the course of the next few weeks, we'll probably see the dollar tending slightly higher. In terms of what that means for the markets, again, the equity markets, probably not a lot unless you see a huge move in the dollar. My guess is that the currency moves will be relatively small, and therefore it's not going to have any notable impact upon the equity sectors.
Peter, is there anything that actually you think a Biden administration will really change in terms of extra taxes or breaking up, and is that already priced in some of the specific industry groups that we're watching?
I mean, obviously, the one thing, and Tom will know more about this than I do, is the corporate tax issue. And the Biden administration is expected to whack up the standard rate back to 28%, which is halfway between where Trump put it and where it was under Obama. I mean, that will clearly have have a lot of implications for corporates, of course. But I think the other thing is it may well impact upon markets in a slightly different way, because there was a suggestion, I think, that companies brought back funds to the United States to benefit from the lower taxes, but ended up, investing those funds rather than investing them in the market rather than putting them into real physical consequence. The tax could arguably help stoke the equity rally. Now, obviously, if the situation runs in reverse, you might see the equity market dip on the back of the Biden presidency precisely for tax reasons.
Peter, in economic textbooks, which you're well versed with, in Chapter 1, they say the markets don't matter, and somewhere out in the vicinity of Chapter 23, they say the markets do matter. You straddle this beautifully. What do you make right now of the wall of money that's out there, given the set of worries that we have? I mean, just the presumed wall of liquidity available has to change how we analyze this, doesn't it?
Well, I mean, the question is the reward of money. I mean, we've been talking about walls of money for years, and sometimes it washes over the barriers, and sometimes it doesn't appear at all. I mean, there is a lot of potential liquidity out there, because I think the corporates and individuals can, theoretically, and indeed banks, can borrow huge amounts from the central bank at virtually zero. But they're not going to do so unless there are, really good investment opportunities. This is not an environment in which, people are going to take speculative positions. There's too much uncertainty for that. So people will enter the market if and when they see great opportunities. Where are those great opportunities? It's questionable at the moment. I mean, I still think there's value in tech, ironically, given that I've been, arguing for years that tech was overvalued. But I think there's still scope in tech, because the coronavirus situation has changed the landscape. And I think those industries which are, positioned for a sort of more contactless world, in other words, doesn't require face-to-face business, be the ones that benefit. And I think that over the course of the coming months and years, that's where we're going to go.
So does Commerzbank then suggest jettisoning traditional large asset, concentrated asset industries?
No, I don't think we would say that. I mean, I think that if you're an investor looking to bring fresh money into the market, there are perhaps better ways to play it than the big asset-rich areas that they're in now. But I think the big blue stocks, the big blue chip companies, have survived an awful lot over the years, and as a consequence, you bet against them at your peril. Certainly at a time of coronavirus uncertainty, you'd want to be trusted. Companies which have been through a few downturns are probably good places to be. So, don't throw all your chips into the new economy right now, I think would be the message.
Peter, thanks so much as always. Peter Dixon, their Commerzbank global equities economist. Now, let's get to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. The vice presidential debate had a lot fewer fireworks than last week's presidential face-off, and Vice President Mike Pence and Kamala Harris didn't interrupt each other as much. Still, last night in Salt Lake City, they battled over a wide range of issues, including U.S. relations with China.
The president's trade war with China. You lost that trade war. You lost it. What ended up happening is because of a so-called trade war with China, America lost 300,000 manufacturing jobs. Farmers have experienced bankruptcy.
Lost the trade war with China. Joe Biden never fought it. Joe Biden has been a cheerleader for communist China over the last several decades.
On the coronavirus, Pence said that Biden plan looks a bit like plagiarism. Harris said Donald Trump had forfeited his right to re-election by his handling of the crisis. And President Trump plans to return to the campaign trail next week, despite still recovering from the coronavirus. He's looking at trips to Michigan and Pennsylvania. Plus, the president plans to take part in the next debate, October the 15th, in Miami. And President Trump says he wants all U.S. troops in Afghanistan home by Christmas. His own national security advisor, Robert O'Brien, came out earlier in the day with a less ambitious piece for withdrawal. He says the U.S. intends to cut the number of troops in Afghanistan roughly in half to 2,500 by early next year. London's days as Europe's stock trading hub are numbered in the Brexit deadlock. More than half the volume in London is in shares of European Union companies. That's at risk of migrating to the EU without a breakthrough in negotiations. The biggest losers would be investors, because more splintered trading will result in worse prices. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Fancy and Tom.
Thank you so much, Ritika. Now, a part of the consolidation phase that has started a couple of years ago with indices or bourses, the London Stock Exchange is now, through our reporting, said to near the Borsa Italiana sale for about €4.5 billion with that. Now, again, this was one of, the biggest things that we were asking ourselves, Tom, is Euronext is not the highest bidder, but it is the most politically expedient choice. And so we'll see exactly who Borsa Italiana ends up in the hands of. But this is definitely something that we need to look at very closely, because there's not much left to buy after this if it goes through.
Well, it's interesting in the financial data world to see this, and of course this is somewhat of a forced sale as LSE moves forward with a Refinitiv transaction. We should point out that Bloomberg LP, of course, competes constructively each day with Refinitiv. Coming up on Balance of Power, David Weston just killing it today, I say. Speaker Pelosi to wander by. And my favorite of the Congresswomen of Congress, Deborah Dingell of Michigan, always straight talking Debbie Dingell on her battleground state. Futures up 12. This is Bloomberg.
tratamos de mantener el nivel de seguridad. Te recuerdo que nuestro objetivo prioritario es evitar o minimizar el riesgo de contagio COVID en la Antártida para mantener el continente limpio de COVID.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
As the 2020 presidential race comes down to the wire, the outcome may hinge on a few key states. I'm David Weston. Join me for a swing state special focusing on Arizona, North Carolina, and Ohio this weekend on Bloomberg Television.
On day one, Joe Biden will repeal that tax bill. He'll get rid of it. And what he'll do with the money is invest it in the American people.
On day one, Joe Biden's going to raise your taxes. It's really remarkable to think. I mean, right after a time where we're going through a pandemic that lost 22 million jobs at the height, we've already added back 11.6 million jobs because we had a president who cut taxes, rolled back regulation.
America's auto industry, and you voted against it. So let's set the record straight.
American people deserve to know Senator Kamala Harris was one of only 10 members of the Senate to vote against the USMCA. It was a huge win for American auto workers. It was a huge win for American farmers, especially dairy in the upper Midwest.
I would suggest the most important moment in our political season, normality there with the vice president and with the senator. Just extraordinary to see that hugely anticipated vice presidential debate last night, really getting a lot of remarkable comments on it. Quiet. Right now, on the quiet topic, we need to shift to the cacophony, the madness of Brexit. Francine?
Yeah, I don't know if it is quiet, Tom. Certainly, it seems like negotiations are stepping up. What we understand is that Brexit negotiations could break down within days after the UK warned it will pull out of talks with the EU if there's no longer a clear deal next week. Now, progress on the key sticking points of state aid and fishing rights appears to be stagnant. Now, for rounding this up is Edward Evans, who covers Brexit for Bloomberg Opinion. Ed, so we brief Tom every day, and we've been talking quite a lot about fisheries. But first of all, just talk to us about the self-imposed October 15th deadline. So,
yeah, this is imposed by Boris Johnson. It's a summit of EU leaders on October 15th. And by that point, Johnson said initially he wanted to get a deal, but has actually subsequently rode back to say at least he wants to see the outlines of a deal by then, see if a deal is possible. And it's a sign, really, that these negotiations are going to go to the wire. It's quite clear that the EU is perfectly prepared to let these talks run on till October, end of October, possibly even early November. The one deadline in this that is not going to change is the December 31st end of the transition period. Now, with that fixed, and the time that you need to take to implement and ratify the end of a deal in time for that deadline really does mean you've got to get something agreed by that point, end of October or early November.
But Ed, give us a sense of how negotiations are going, because publicly they seem to be very acrimonious. Are we hearing through our own reporting that actually we're a step closer to finding some kind of compromise?
There is at least a recognition on both sides of where the landing zone might be. I think what you've seen are two big issues here that have been two big obstacles. The level playing field, what state subsidies the British will be able to give out to businesses after Brexit, and fishing, what access EU boats are going to have to UK waters. Now, on state aid, it looks like the British are at least hoping that they can move on that and that they can move closer and adopt some form of compromise. Now, on fishing, it too looks like Michel Barnier, the EU's chief negotiator, is pushing the French to back down from, and other European countries to back down from their pretty hardline position that they want to keep the same access to British waters as they've enjoyed as members of the EU. Now, the important thing here is fishing was always going to be the last part of this to fall into place. And if you can see that the Brits think, okay, as Frost was saying yesterday, that fishing is now the biggest outstanding disagreement between the two sides, you can see then progress and at least the path to an agreement. Whether you actually get one will depend on a political decision, and that's where I think it's going to be very key to see what Johnson offers on state aid, what he is prepared to offer there. Does that satisfy the EU? And on the EU side, whether Barnier can keep Macron, as it were, on side with any compromise that he wants to do.
Edward Evans, I find this fascinating. The late, great Bernard Bailyn, the historian dying here a few weeks ago, always folded fisheries into a study of North American history and the contentiousness of it. For Starmer and Johnson, what is the United Kingdom geography most affected by the fisheries debate?
It is political geography here is really important because there are a number of seats, traditional fishing constituencies, places in the southwest, places on the northeast coast, Grimsby for one. These are areas that were hit very hard by the common fisheries policy. And of course, don't forget, these are areas that in the recent election turned blue in the election. We talk about Johnson breaking the red wall. Part of this was appealing to those northern constituencies that don't traditionally vote Tory, with Brexit as the goal. So that's the really important point here, that this is about preserving Johnson's majority and keeping those fishing areas backing his party.
Ed, thank you so much. Bloomberg's Edward Evans there in charge of our Brexit coverage joining us this morning. Now, coming up in the next hour, we also talk Brexit with Ann Cairns, MasterCard Vice Chair. That's at 6:30 a.m. in New York, 11:30 a.m. in London. We'll talk, of course, about payments. And one of the key surveys we saw is that a lot more people are looking at using their debit card instead of their credit card. So how does that change the fortunes of MasterCard? This is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is it time to redistribute the wealth? Two perspectives.
Pointing to billionaires and saying we should take their money away
is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg Business Flash. Regulators have slammed Citigroup over risk. The bank will pay a $400 million fine and must seek the U.S. government's sign-off for major acquisitions. Regulators criticize Citi for several persistent problems with its risk controls. The bank says it has significant projects underway to improve that. The CEO of Slack is urging Congress to go slowly as it considers breaking up some of the biggest tech companies in the U.S. Stuart Butterfield spoke with Bloomberg TV.
Got to be really careful about the remedies there, though. I mean, I'm pro-regulation in the general sense. It's great that there's not as much lead paint around and the cars have seatbelts and things like that. But there can be real unintended consequences, and I guess I just hope that we think very deeply about any action that are taken on the legislative side.
A House antitrust subcommittee has accused Amazon, Apple, Google, and Facebook of being monopolies. The companies made it clear they're ready to fight. And that's the latest Bloomberg Business Flash. Tom Francine.
Ritika, thanks so much. What I know, folks, is in this pandemic, we've been worried about the plants behind people. And of course, the sport is who has the best book collection. Francine, I'm going to give the award right now worldwide to Lorenzo Bini-Smaghi. We were dazzled by his library behind him during this great interview.
I have to say, Tom, I got so many messages actually about how, his very impressive, very impressive library.
I want that book.
I mean, if you're a chairman, that's the look. You need to be well-read as well. We did speak earlier to Lorenzo Bini-Smaghi, the chairman of Société Générale. We talked about dividends, we talked about banking sector, but we started by talking about some of the stimulus from governments.
In the US and in Europe, that's maybe more is needed, more stimulus on the fiscal side. Europe is discussing the recovery fund, the next generation EU, as it is called. The agreement is not yet finalized, but there is a lot of pressure to try to close this issue, because otherwise markets will start to worry again. And monetary policy may need to do more also, in terms of convincing markets that everything that is needed will be done to avoid a depression or a deflation. Inflation rates in Europe are negative, and this is worrying because it is disanchoring inflation expectations, and the risk of entering into a loop, a negative vicious circle, are rising again. So the discussion is again, does economic policy need to do more? That's what has been done so far.
So, is there anything that can actually be done to try and avoid the Japanese, example of deflationary pressures? Or overall, because we're doing quite a lot in terms of stimulus, and because, there's quite a lot of central bank action, and because a rebound could be quicker once we find a vaccine, you see a risk of inflation?
I think the European move to this recovery fund has been a game changer. It has certainly stabilized expectation. I think the risk is that it's coming too late in the second half of 2021. So what needs to be done is first to take the decision quicker and maybe to front load part of it. I think markets are now seeing the risk that most of the measures will come too late when the recovery is suffering. So we need to strengthen the recovery and to upfront some of the measures that are needed in this phase to accelerate, in particular, public investment, and that create a multiplier effect on the economy, and maybe also contribute to stimulate private investment.
Do you worry about negative rates, and negative rates staying, here for much longer and hurting the financial system?
Well, I think that implicitly Christine Lagarde has said that, hadn't the ECB entered QE, it should have reduced interest rates to a much lower level, and this would have created negative effects. So the ECB, I think, is starting to recognize that beyond the very short-term effects, negative rates are producing a negative impact on banks' profitability, and in the end, on banks' ability to lend. I mean, we have to look at the combination of monetary policy, but also prudential regulation, and how the combination of the two are creating the environment which really enables banks to support the economy. And if I look at the combination of the two, negative rates and some of the prudential regulation, in particular concerning the ban on dividends, which may be correct in the short term, but if it remains, it creates uncertainty about the willingness for investors to stay in the financial system as investors. And so there is a risk of fleeing away from the financial system, and this is not good for the banking system and for the real economy.
Francine Lacroix, an important interview with Lorenzo Benismaghi, chairman of Societe Generale, very important for Europe. Coming up with our question, our conversation of the day on the state of the equity market, the linkage to our financial and economic system. Abby Joseph Cohen of Goldman Sachs. Stay with us from London, from New York. This is Bloomberg. This morning, stimulus to the rescue. Stocks are bid. The Dow only 3% from a record high. Congress, they argue over a second bailout for the airlines, all in $28 billion. The president, well, he leaves his kingdom of isolation. He returns to the Oval Office. Top White House security official Creed Bailey, he does not. Our Jennifer Jacobs reports he is, quote, gravely ill. And it was not the greatest failure in debate history. Pence and Harris and Pence, they remind us of a civil political discourse. Good morning, everyone. This is Bloomberg Surveillance from New York, from London as well, with Francine Lacroix. Francine, I want you to explain the pub uproar in the United Kingdom. I was going back and forth with our guy driving all of economics, Simon Kennedy, about this. We talked to Edward Evans earlier. I mean, they're going to shut down the pubs at 10 p.m., but they're open at 9 p.m., so I can get the virus then, but I won't get it at 11 p.m.? Is that how this is going to work?
I have to say, Tom, there are a couple of comedians basically making fun of this move. So I think if you speak to government officials like we have and head of policies, what they say is that they saw a significant, let's say, abandoning of social distancing rules when people had one or two drinks too many, and that would be in the later hours. And that's when, especially the young would hug and kind of, have shots or things like that. So they tried to close them earlier, and they thought that this would be a good way of, still not killing off the pubs because they still had people coming in, but they would just close 1 or 2 hours early to avoid that. Of course, it doesn't make that much sense because people just start drinking earlier.
Really?
And the uproar is like, actually, what is the government is doing? And so, yeah, Boris Johnson is not having another good week.
Surveillance team coverage on this matter, folks. Jonathan Farrell reporting on the scene. We'll have much more on this, of course, through the day. It's a serious issue, I should point out, in the United Kingdom. Again, futures up 12. We've got a wonderful hour for you. Kevin Cerulean Moments from Salt Lake City. First, though, your first word news. Here's Ritika Gupta.
Morning, Tom, Francine. It was a debate heavy on policy without all the dramatics of last week's presidential event. Vice President Mike Pence and Kamala Harris squared off last night in Salt Lake City. Not surprisingly, the first question had to do with the coronavirus.
You respect the American people when you tell them the truth. You respect the American people when you have the courage to be a leader, speaking of those things that you may not want people to hear, but they need to hear so they can protect themselves.
I mean, quite frankly, when I look at their plan that talks about advancing testing, creating new PPE, developing a vaccine, it looks a little bit like plagiarism, which is something Joe Biden knows a little bit about.
Pence said President Trump has put the health of the American people first. Harris said he's forfeited by right to re-election by the way he's handled the pandemic. President Trump called his case of coronavirus a blessing from God, and he credited Regeneron's experimental antibody treatment for his apparent recovery. The president says he plans to authorize emergency use of the treatment and provide it free to Americans. And the Trump administration plans to impose more sanctions on Iran's financial sector as soon as today. The goal is to further choke off its economy from the rest of the world. Bloomberg's learned the U.S. could blacklist as many as 14 Iranian banks that have so far escaped restrictions. Hurricane Delta is now taking aim at Louisiana after hitting Mexico. The storm slammed into the Cancun resort area, knocking out power and triggering a dangerous storm surge. Delta has weakened to a Category 1 hurricane, but it's expected to strengthen before coming ashore in Louisiana tomorrow. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities, up we go. As I mentioned, the Dow, 3%-ish under record highs. Futures up 14. Dow, 28,287 on futures, up 108. The VIX comes in, 27.85. I'm going to keep this quick. Bonds, churning, maybe yields come in a little bit. And I'm watching Turkish lira get out, beginning to threaten 8 lira per dollar. I just really don't know what that means for the financial integrity of Turkey. Francine?
Don, first of all, a bit of M&A because there was that big news story that, the LSE is nearing the sale of Borsa Italiana, $5 billion to Euronext. But actually what's interesting is that there seems to be some kind of consortium with, for example, some of the banks in Italy, including CDP, but also Intesa San Paolo, taking stakes in Euronext. So that would be something that could be quite interesting. Overall, if you look at the markets, they're trading up on hopes of extra stimulus. And then I'm also looking at, dollar weakening a touch, pound kind of moving sideways. And if you look at travel companies, they're leading some of the gains in Europe.
Very good. We consider the debate. Our Kevin Cirilli in Salt Lake City now, he will move from Utah to a very different Miami in America if there is a second debate as well. Kevin, the Deseret News led with the idea of a mostly civil debate. Is there any hope that we can get a mostly civil debate in Miami?
Well, we're going to have to wait and see. I think the bottom line from that first presidential debate was that it was clearly a strategy on behalf of the President Trump and his re-election campaign in order to try to shake up the first presidential debate. Polls would suggest that that didn't have the effect that they had hoped for. But last night, what you saw were my three takeaways are, first and foremost, Senator Harris trying to draw a sharp contrast stylistically as well as on substance, particularly as it relates to racial inequality and to the tone coming from the administration. Secondly, Vice President Mike Pence also trying to draw a sharp contrast with Senator Harris in trying to link her to Congresswoman Alexandria Ocasio-Cortez on new energy policies pertaining to fracking, on the economy pertaining to increase of taxes. He tried to, at one point, say that one of the first things that she would do and that President Biden would do would be to reform and replace the Republican tax piece of legislation. But then finally, on geopolitics, we actually did get a substantial exchange as it relates to U.S. and China policy, with Senator Harris saying that the Trump administration has lost the U.S.-China trade war, and Vice President Pence saying that Democrats never even fought one.
I look, Kevin, at how this drives forward where we're going this week into the Sunday talk shows, etc. What changes with this debate? What is next on the Cirilli calendar?
Well, look, later today, nominee Biden as well as Senator Harris will head to Arizona, where they will have a joint presidential campaign stop. And clearly it's also a sign of where they're looking to spread their electoral math. Arizona is the state that Republicans typically have been able to win, especially in a presidential year. Now those polls are neck and neck. Vice President Pence will also campaign in Arizona. And based upon my reporting, what I can tell you is that a senior Trump re-election campaign advisor told me that we could see President Trump back on the campaign trail as early as next week.
Kevin, does the campaign trail, change undecided voters' thinking? I mean, there are not many, or does it just energize the president's base so that if it rains, people still show up and vote?
Well, yesterday I spoke with Rick Grinnell, who is a senior advisor to the campaign, obviously also has had geopolitical influence on the administration. And I asked him point blank about these Quinnipiac polls that have come out, especially in battleground states like Florida and Pennsylvania. And what he said is that if the president's going to win re-election, it's going to be a turnout election. He said that the way the president was able to win some of those battleground states last cycle was by turning traditionally Republican counties blood red, his words, blood red, by really making the turnout and attracting Republican voters that typically have been shied away from previous elections. And Tom and Francine, I mean, and I would note, I spoke with another official on the re-election campaign, and they walked me through specifically why they're not buying some of those polls. Clearly, the Biden campaign feeling emboldened by some of that polling data.
Kevin, there's a managed message at the White House that you know so well. Our Jennifer Jacobs overnight reporting that the head of the security for the White House, Cleve Bailey, is gravely ill. He is really deteriorated in his battle against this horrific virus. I understand it's a side story, but it really focuses for the White House the intensity of this illness. How will they receive that difficult news?
I think I think sometimes it's difficult when you're outside of Washington to grasp just how much of an industry town the nation's capital is. And in many ways, that industry is able to see, yes, even in this day and age, beyond Republican and Democratic party allegiances. And so what is really happening back in the nation's capital right now, Tom, is this grip of the pandemic in a way that hasn't been experienced since March. And so yesterday, the mayor of the city, Mayor Bowser, said that many of the restrictions that are in place are going to have to be extended until the end of the year. That is because of the increase in cases. Now, she, of course, is a Democrat mayor. She has also been engaged and advised by some top upper echelon Democrats. However, there is a reality setting inside of the city that there's been an increase in the number of cases.
Kevin Cerulli, thank you so much. Greatly appreciated. A long day and night for Mr. Cerulli at Salt Lake City. On to Miami, maybe by way of Arizona and a few other selected states. The political debate of our season continues. David Weston, exceptionally strong in the 12 noon hour today, including on stimulus, the Speaker of the House. Futures advance up 15. This is Bloomberg. Good morning.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, the focus, of course, on the markets is on the vice presidential debate, but more than that is really on the hope that we'll have some kind of stimulus in the U.S. So we're seeing stocks going up here in Europe. I'm looking at travel stocks, for example, and leisure going up. And then the other thing is Regeneron rising some 4.9% in pre-market after the endorsement of President Trump. And then very quickly, just a headline coming in saying that the Spanish court has blocked Madrid's new COVID restrictions. So I'll dig into that and bring you the latest.
Very good. Again, futures up 15 as well. I would note in the bond market a little bit of a yield coming in today. It's a back and forth there as well. The 10-year real yield at negative 0.94%. Coming up next, Abby Joseph Cohen of Goldman Sachs. Stay with us. This is Bloomberg.
you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keeney in New York. Futures up 14. Dow level 28,290. Right now, widely anticipated for you. Abby Joseph Cohen joins us with Goldman Sachs, our advisory director and senior investment strategist. And of course, the lay of the land here is when Abby Joseph Cohen tries to synthesize our economics and our finance into a belief in the equity markets. All listen, whether they agree or disagree. Abby, just simply now, can you at the margin acquire equities this morning?
That's a terrific question, Tom, for traders. And the answer is, of course, it depends upon your time horizon. The Goldman Sachs house view is that S&P 500 is currently modestly undervalued. And of course, that's based upon the straight arithmetic, what we expect for corporate profits, but also very importantly, what we expect from the Fed. And if you think the Fed is going to stay friendly, then there could be some room to grow in the equity market. By the way, not just in the United States, but in the other major markets as well. However, what we've discovered is that there is intense volatility, and it has been rising. That is not unusual as we approach a major election in the United States, and also as we see that there has been some erratic movement with regard to fiscal policy. It's not just the Fed. We're also now looking at what happens to the stimulus bill. I think it was very clear over the last few days, FOMC and other statements from the Fed, that they believe we need another stimulus package.
Speaker Pelosi with David Weston here in the 12 noon hour. Abby, I want to go back to 1987 when it was just so darn simple. John Templeton was there, Schreier was there of Merrill Lynch, Robert Kirby, and they talked to Lou Rukeyser about the simplicity of a stock market major crash, et cetera, et cetera. Now, there is so much complexity. There is so much information flow. How do you stay with a conviction call on equities given the complete cacophony of information that we have?
You know, 1987 was a market event. Basically, the economy had not been afflicted by whatever was going on. So it was okay to go back to those models, do a calculation about valuation. That is not the situation right now. And I have to tell you that I am quite concerned that there could be considerable downside as well, depending on any number of factors that we can't fit easily into our models. This includes what will the Congress do? What will the president say? And of course, the election outcome. And so those of us who have lived our professional lives really focusing in on the math, I think should feel very humble right now, because what we recognize is that the models may not be able to properly reflect all of the volatility, not just in the markets, but in the economy, in policy, and also, of course, in investor sentiment. One other thing, within the equity market itself, there are wide gaps in relative valuation. And that tells us something too. When markets rising, what we see is that there are just a handful of stocks that tend to drive that performance. And that, of course, could make the market more suspect as well and more volatile and vulnerable should there be some disappointments with regard to just a small handful of those particular issues.
Abby, well, good morning from London. What exactly is the market you think pricing in at the moment? And when you say, you know, it is very difficult to read what the U.S. election will bring in terms of composition of the House, or even, giving of power if Joe Biden were to win. So how does the market react in that case?
When we take a look at a lot of the surveys that are done of investors, what we're seeing is I don't want to say presumption, but the increasing probability of, let's call it, the blue wave. There seems to be a probability that Mr. Biden will be elected based upon polling. There is the possibility that the Senate could switch over to the Democratic column. And of course, there is the presumption, this is a presumption, that the House will stay blue. And what we're seeing from investors over the last several days is that a blue wave might not be such a bad thing, because it would give us more certainty with regard to policy, particularly with regard to the use of fiscal policy to help our economy at this point.